Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, April 3rd, 2019. If you happen to be viewing this from the Right Side of the Chart Daily Digest, that goes out at 6 o'clock Eastern Time every day, and I had to run out before the close today and just getting back, so by the time I get this video uploaded and published, it's not going to go out until tomorrow's or Thursday's Daily Digest. So just keep that in mind. YouTube subscribers, you can get a push notification right away. Obviously, members of the site, you will get an email notification when this goes out. So this one will be relatively quick. We're going to just drill down, look at weekly, daily, 60-minute charts, and probably the most significant things that I'm watching right now are on the 60-minute. Well, this as well. Let me just start out here. This is a chart, the chart that I've been starting out with for weeks now, and so what we have today, or I'm sorry, this week has the potential to be the first weekly close, solid weekly close above that 282-ish level. Remember, it's more of a zone there. We've had a couple moves above and below it, so we've yet to close, print a solid weekly close above there, and that's again after 5 weeks of testing and failing to do so. So this is week number 6, but as I said to members in the video I did earlier today that was covering the broad markets as well as a lot of trade ideas, you know, a lot can happen in just 1 or 2 days in the market. So let's see what happens. As of now, I'll update, you know, at the end of the week. Obviously, I'll do an update, but so far looking good for a breakout above that level for the bulls. But I will get to the daily charts here in a second and tell you why that may not mean so much or why it may be short-lived. Let's go down to the daily chart. There's a lot of levels here. I added a level here around. This might not be exactly on that high. Let's see. That high was 293.94. So yeah, we'll just call it 294ish. I know a lot of eyes and focus will be on that all-time high for the SPY right there. We're still comfortably below it as of now. But the closer you get, those levels tend to act as magnets and kind of draw in buyers and squeeze out shorts. But we'll see. You know, that's certainly it's a major previous reaction high, an all-time high, so it's certainly a significant level, and anything can happen. So let's see if we fall shy of it. Let's see if we test it and reverse. That could give a double top high, or if we break out and then where we go from there. And there's a myriad of possibilities, so I'm not going to cover them all right now, but I can tell you this, and I can say this with a pretty high degree of conviction. You know, there's always been talks about a melt up top or something like that. Based on the technicals, the odds for that are pretty slim to none, I think. At best, breakout in a back test. In fact, the most bullish scenario for the SPY would be, and at least in my opinion right now, would be some consolidation or a correction before it took out those highs. That would look something like this, you know, consolidate. I know we did some consolidating here, but guess what? It was not enough. What makes me say that? Well, this is the RSI. This is one of the best and most commonly used measures of how overbought or oversold the market is. And the thing is, we've had some consolidation here, but we've stayed persistently overbought for weeks now. So you had this tag, we were above the 70 level there, hit it again, and we're at 66 now, with anything considered 70 or more bought on the RSI, and with divergence to boot. So, you know, anything is possible, including the fact these divergences can be taken out. You can see I had the lines pushed up here, and I have this one pushed up. You're probably wondering what that's all about. This is the current divergence, and here, let me clean this chart up for a second. Here, I just flipped over to another board. I have a few lines on there, but I'll leave those there. It'll make a point. So here's our current divergence line right here. There's a negative divergence. At this point, it's not confirmed because the PPO's turned back up. So it's no longer confirmed. When it pointing up means that the PPO, it's a momentum indicator, and it can keep heading higher and higher and higher until the divergences are turned out. But when you turn back down, then you've put in another reaction low on it. So those are our divergence lines right there. Here, let me add it on the RSI. And unlike trend lines, so here's a wedge right here. This I probably shouldn't, that was just a wedge line really, but let's take it off for a second to illustrate this point. This is a trend line, an uptrend line, which was then broken and back tested, led to the biggest correction since the bottom was in, it looks like, breakdown back test. An uptrend line is support. Divergence lines are not support. They're merely showing you the negative divergence, showing you, or to me, it's a visual that prices are making a series of higher highs while the indicators are making a series of lower highs. And because the momentum is up, divergence can simply be extended. So this line, if and as we go higher, if we do that in the coming days, it would look something like this. So here's a scenario. Let's take a line and put it up around the previous highs. Let's just say the market wants to lift and has a couple strong days here this week, heading into the end of the week, Thursday and Friday, and can somehow get up there to test that. It would look something along these lines. You would have negative divergence still, and even if you popped it, anything is possible. The divergences could be taken out, but it's been my experience that much more often than not, when you have a divergent high and you're overbought, which we will be, we're just below overbought readings now, and we certainly would be if we popped up 2 more days, that the failure rate is considerably high, let's say very high at that point. So again, it's all about risk reward, and I know I've been talking on the same thing for a while, but the upside to that new high, and if we popped it soon, you're about a 2.5% to that high. So let's say you head up 3.5%, and then you put in a negative divergence on the daily time frame, you're probably talking for a move back down here, at least 273, maybe down here 280. So the risk reward is just not attractive, or won't be in that scenario. However, there's a lot of scenarios, and we can draw them all out here. There's an unlimited possibility, different scenarios, but again, this would be healthier to see the markets work off, consolidate here, and get the RSI down for some period of time, maybe work off these divergences, and then go on and break out, several weeks, several months from now, after it has either corrected or consolidated for a while again to get that RSI down to levels where we can make a sustained breakout. So that's it. Pretty, just not attractive. Our the risk reward, our ratio we call it. There's that Thursday big pop after the Fed. We are above it, but again, slightly. We took it out yesterday or the day before, and yesterday had the lowest trading volume of the entire year by far. You can see the volume bar right here. I put the crosshairs down there, and if you look to the left where the horizontal line goes, you can see there's not any single day, holidays, anything you want in there, days surrounding holidays, that is, that you see such low volume. Now, it didn't mean a lot because this wasn't really a breakout or anything. Somebody asked that question, well, what does it mean? Well, if we had let's say a breakout of a key technical level, support, resistance, and you have below average volume, especially very low like that, it doesn't negate the breakout, but it certainly doesn't help to confirm it. Breakouts that occur on volume above average volume, 1.5 times or better, have a much higher chance of sticking and playing out than those that occur on average or below average volume. But it's worth noting, and today was also another low volume day. So, it appears to me that while the sellers certainly are not in control right now, the market's been drifting higher. Certainly not a lot of buyers in this market. It is drifting higher from really a lack of selling and a small amount of buying pressure. And again, that's evidenced by the low volume recently, and also these small candles. We're just not doing much impulsively. Let's watch how this week goes. Let's not read too much into the last 3 days. Let's see how we close the week, and then there's some things I want to show you on the 60-minute chart that I think warrant bear watching right now. Before we get to the 60-minute charts, QQQ, this is a daily chart. Let me pull this down a little bit or do it like this. You can see the same story. We have the negative divergence on QQQ, and the only thing that's changed since the last update here, we had an extreme overbought reading right at the that pop on Thursday the 21st after the FOMC meeting, and at that point in time we did not have negative divergence, but we do now. The reason we have it now is we had a pullback from there in QQQ. QQQ went on to make a new high. Today it popped above that high from Thursday before last, but very, very small candle, little doji. You can see it there, up about 0.5%. Still up, and it's still above there. So you have to, give the market some credit for that. I can tell you we certainly don't have any sell signals at this point, but we could soon. I'm going to get to the 60-minute charts. That's that. And again, now we have potential, not confirmed. I want to see this PPO turn back down. If that does, we'll have that confirmed negative divergence there on QQQ. And watch that doji. Watch what kind of stick we get tomorrow. Here's the thing, and this all plays into these 60-minute charts here. We have pointed out this morning on the site. Let me jump over to the futures, and then I'll get to the ETFs. Let's see if I can find that. Here's NQ. So here's what I pointed out to members this morning, or actually public content. It was on the front page. It's general market analysis. These are levels I'm watching. These are the NQ E-mini futures, 60-minute chart. We have a pretty well-defined uptrend line right here off the lows there. And that's, what is that, late March. We have divergence right here, negative divergence. You can see clean divergence. And this is the first time on the 60-minute chart that we've had 60-minute divergence, negative divergence, then back here. Since back here, I should say. We had this sort of, it's kind of like an ascending broadening wedge, just a long, narrow pattern. But you can see we had the divergence there. And that led to one of the biggest corrections that we've had in a while. And this was the entire correction, 1, 2, 3 wave. And that ended with bullish divergence right there. And so that bullish divergence was the catalyst for this rally, which is now, we're on watch here. We don't have, and the sell signal came very close. You can see that NQ popped below that level. On that, here, let me zoom in a little tighter for you on YouTube. There it is. So we had a little pop below there, but we failed to print a 60-minute candlestick close below that trend line. So this is the level I'm watching tomorrow right here. Sorry, I tried to circle that for you and show you that was our little whipsaw signal. Let me grab a circle tool. There we go. So let's watch to see if we get a close below there. Let's see if these the indicators continue to roll down. There's targets for you NQ traders right there. And if we get that, that gives us a possibility. In other words, this right here is the technical catalyst or the potential. We don't have the catalyst, needs to be a breakdown, but this is a setup that if these break down, this breaks down as well as ES, that would likely bring us down into at least this target here, quite possibly these, and then that could in turn cause the S&P 500 to close back down on or below that key resistance level on the weekly basis that I'm looking at. So that's it, guys. I know it's like I'm clinging to a thread here for the bearish case, but this is what I see. If I were to ignore these trend lines, ignore these divergences, I wouldn't be doing my job. You do with them what you want. I'm watching these for the next sell signal, even if it's a short-term sell signal. But again, that short-term, even if it only plays out for a minor pullback of, let's say, 1, 2, 3%, that can then affect and will affect the weekly charts, how we close. So that's NQ. Let's look at ES, because what I said to members on the site today, 4 things need to happen for me to for a sell signal to trigger, especially because the near-term uptrend is bullish. The near and intermediate off the lows in December, and as well as this is the near-term trend. That's since the last correction. That's bullish. So what you need to have happen, at least what I want to see, is not just NQ or ES, but both NQ, ES, as well as SPY and QQQ all take out these trend lines. Why? Well, number one, again, trend is bullish. You give it the benefit of the doubt. You don't jump the gun on the first to break down. If you do, chances are you'll have get caught up in a whipsaw signal. It looks like ES broke down and closed right on the trend line today. So really how we open tomorrow will determine whether this breakdown sticks or not. But again, I showed you that NQ closed above the trend, so we need to see a little more downside. Here's my targets for ES if it breaks down. Should any of these get hit, even that shallow target, that will get us pretty close, and most definitely if we come all the way down here to 2790 anytime soon. And again, it can happen quickly. You look at that drop. If that happened, that could certainly happen by the end of the week, and then that would mean that SPY once again failed to take out that 282-ish level on a weekly closing basis. So this is what I'm watching. There's your divergences. Really the bigger picture is, you know, this is just a steepening of the divergence right here. Your divergence lines start back here. It's a series of consecutive divergences. That's what's drawn here, and within there you have these little smaller divergences right there that, boom, that one led to there's the divergence right there. That led to correction 1, pushed up here, correction number 2 at this divergent high right there. And you know, as long as you have the indicators making lower highs, as you do here, starting from this point, versus prices making higher highs, you have the negative divergence. And the bigger the divergences get, remember there's little divergences within there that often lead to these corrections, but ultimately you get these big divergences that last several weeks or more, and it leads to the bigger drops. So that's what I'm watching. That would be the bearish case, or at least keep the market guessing for another week if we can go into Friday and have that pullback. And now let me just show you what the bullish case needs to see. It needs to see these divergences taken out. So we need to come up here, move on up. Remember, this is only a divergence line. It can be extended. We need to ideally stay above these trends, or look, you know, bulls would love to see a false breakdown. Maybe we get a sell signal. I don't know if there's any shorts left to pile in, but if they did, they would get squeezed out if they could gun it and reverse it there and then take out the divergences. So these are things that, again, would be just check marks in the favor of the bulls. But like I told you, this is a 60-minute chart. Go back to the daily and weekly charts. Those divergences on the daily are not going to be taken out anytime soon, and therefore, no matter what the market does to the upside in the next couple days, it's not going to change the fact that the risk reward is not very attractive on the long side right now at all, in my opinion. Okay, and finally, let's just take a look at the 60-minute charts, the QQQ. Let me roll up here, roll in a little tighter. So what we have here, really a series of divergences. Again, we had a divergent high there, similar to what I just showed you on the 60-minute chart, and that led to correction. There was we had the divergent low in the futures right there more so. But that's what we have right now. So we're barely clinging to the divergences with the PPO making a slightly lower, maybe an equal high, while prices make a higher high. We did break this trend line here on the 60-minute chart of QQQ. Let me tighten that up. So we closed below there. So again, if we open down tomorrow or can't gap up or move higher, then these breakdowns will be confirmed. The thing about breakdowns, and I had to leave my desk right around 3 today, so I missed this part of it. But I outlined these ahead of time. This is what you want to watch for. But the thing is, when you get close to the close, you need to be cautious or maybe skip on taking a breakout, whether it's a long side breakout or a short side breakdown, because you're going to get saved by the bell, and then you have the overnight, whatever goes on headline wise and everything else. So again, this will be continued tomorrow. This will either prove to be a little whipsaw signal, but as I just showed you, we don't have NQ didn't close below that level, so we're still pending a sell signal on, was it NQ or ES? Either way, we need to see a little more downside there. We had divergence on the RSI, but they popped above, and what that did, it put in an extreme overbought reading as well. So that's something else that kind of gives the market headwinds. We haven't been this overbought on the 60-minute charts. I'm rolling here, gosh, going back for before the December lows. I didn't realize that. That's a big overbought reading there. And again, it's not a sell signal, but it just gives headwinds into the market until those overbought conditions are worked off. There it is on SPY, breakdown, closed just below. So that's it. So tomorrow, let's watch these levels. If we open down or gap down, you see the targets there. If you're a dip buyer and you're looking for a road to new highs, Here's my targets right here. And if you're planning to be short or you're already short, this is it as well. And again, I'm most interested, although there's some, intraday or day trading ops or short-term swing trading ops. I think it'll look something like this. I'm more interested to see how we close the week today, and close the week this week on Friday. But in the near term, be watching these very closely, these levels here. All right, let's wrap it up here, and we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. I hope you enjoy.